All right, good afternoon, folks. Testing 1, 2, 3. Testing 1, 2, 3. How is the sound coming in today? Type a double D in the chat if you can hear me and see my screen. Type 2 Ds in the chat if you can hear me and see my screen, please. Just started the broadcast. Everybody can see the screen except for Chris. Chris, are you sure? Got double Ds, double Bs. It will all make sense. Hey, Walter, how you doing? Hi, Norman. All right, Chris is good now. All right, guys, we're going to get started here. Just running about a minute or so late. Just give me one moment here, make a couple of adjustments, and we're going to go ahead and get started. Hope everybody's had a great day, great week so far. Happy hump day. All right. Get started in just a moment. All right, let's go ahead and kick this bad boy off. They're on talking there for a second, but on mute. How's it going, Dave? Sounds nice, Chris. Okay. All right, well, you're here to see top tools for catching corrections in major moves. My name is Silas Peters, founder, head trader, seasonal swing trader. Do me a favor, just like to see, is this everybody's first time? This is everybody's first time. We do this presentation late yesterday evening, a little bit later than we normally do. I realized it was pretty inconvenient for a lot of folks. That's why we have a lot of folks in here today that wanted to attend. This time was a little bit more favorable, and hopefully we can kick a replay out either this afternoon or tomorrow at a minimum. But let me know if this is your first time or if this is a repeat. And I want to say welcome. Do want to say welcome, and I do mean from the bottom of my heart. I want to say thank you for your time. I know and realize everybody's time is extremely valuable, and everybody has commitment, so it does mean a lot that you're willing to spend about 60 minutes or so with me today to teach you a very high probability strategy that I've been working on since last year. I'm very excited to show you what it's all about, and then if you have time, I encourage you to stick around to the end, and we'll look at some live market examples, see what happened in today's markets with this current volatility that we are experiencing. And right now, we're kind of back up in melt up mode. Good thing is that what I'm going to show you, it doesn't really matter. It works in all market scenarios. So let's go ahead and get started. We must always begin by the risk disclaimer as required by the regulatory governing bodies and our authorities. Past performance is not necessarily indicative of future results. There is substantial risk is also associated with trading. All your risk capital should be used to trade. Trading is risky. This means that don't trade with your rent money, your mortgage money, your child's educational funds, your cash under the mattress funds, your milk money. Trading is risky. You can lose more money than you actually put into your account. So before we get started, we want to shut everything down. We want to remove all distractions. That means closing browser tabs, logging out of Facebook, Snapchat, Instagram, TikTok. We'll be together for about 60 minutes. We are recording, and we do expect to get a replay out, I think this afternoon or tomorrow at a bare minimum, but can't guarantee that everything will work properly. That technology will cooperate with us, so you want to make sure you listen and take good notes. Before we begin, I'm going to formally introduce myself. My name is Silas Peters. I'm a founder, head trader, seasonal swing trader. This is me with my family. Simply put, I'm a husband, father, son, love hanging out with the family, whether be at the beach, on a boat, hiking, on the golf course. I spent a lot of time working, a lot of time in front of the screens. So I like to get outside and enjoy the great outdoors whenever possible. But how did I get here? How did I get to where I have the privilege of speaking to you today? Well, in college at the University of Alabama, I majored in investment finance and economics. That was all good and great, but I had no idea where that was going to send or land me. Fortunately, one of my dad's golfing buddies used to be an ex-wheat trader in the grain pits of Chicago. And we were playing one day, one thing led to another. He was asking me what I was going to do. He started telling me some of his stories about his time in Chicago. And so I went back and I was intrigued. I started doing research on the pits, trading, the floor, Chicago. I was completely enamored by the whole situation. Well, what did I do then? Well, needless to say, I was a bit green on the sleeve when I sold my car 3 days after I graduated, rented a U-Haul, and I drove to my new digs in downtown Chicago. Right here, I signed a lease to a unit, studio unit on the 23rd floor of Marina City, the old Honeycomb Towers. Is anybody familiar with those? I'm sure you've seen them either in real life, or if you haven't, you've probably seen them in a movie. Great place overlooking the beautiful Chicago River. My balcony was bigger than my unit. Had Smith & Wollensky Steakhouse down below, House of Blues literally on the bottom floor of my building, and then Harry Carey's and several other restaurants and bars and whatnot, just a block or two behind me. So great experience. And actually the same day I moved in, I took the U-Haul truck back to its depot, hopped on an Amtrak, and I scalped a couple tickets to the US Open at Olympia Fields in Kohler, Wisconsin, to chase Tiger and Phil around. So I like to say that's my first trade in Chicago. I exchanged money for tickets on an Amtrak train, and before I could even blink, the guy had disappeared in the wind. So I thought I was taken by the market maker already, but the tickets did end up being valid. So back to my journey, or my career path, if you will. My first career entailed this, and I want you to picture this. I was working the Asia, European, and early New York session trade desk. So if you remember me telling you I sold my car, well, this picture right here could literally be me walking to work at some time around 6 p.m., 2 a.m., or if I got off early, maybe 6 a.m. And I remember on numerous occasions, me walking down the middle of LaSalle Street, nobody but me and a snowblower in the entire city of Chicago, looking up at the Board of Trade with the God of Grains series looking down upon me, and then getting into the Board of Trade and the temperature reading a solid negative something degrees Fahrenheit. Now, I am from deep South Alabama on the Gulf Coast, or in the Gulf of Mexico. I'm used to humidity. I am not used to Chicago winters. So when we got into the teens or 20s, that was a warm welcome. So I did this right here for a few years, working at the Board of Trade, handling some serious trade size across the Board of Trade, the MERC, NIBOT, NYMEX, and various London and Asian exchanges, trading for a hedge fund, banks, other CTAs, everything from corn to copper to hogs, euro dollars, Japanese government bonds. A great, incredible learning experience, both with markets and trading, as well as the Chicago big city life. But I decided to head back south when some other opportunities opened back up. And that's when, I like to say, I went truly corporate. I went from a fast-paced and somewhat stressful hedge fund trade desk to a more slower-paced life managing equity and fixed income portfolios and other investment management roles right here in this glass building. To me, this was extremely boring, but it was the safe route. I missed the action, the excitement of the pits, the tape, the screens. So through some additional contacts, I was led to a day trading firm where I helped run operations, execution, trading education, to then running a couple of futures brokerage firms, and then ultimately working in a private family office, serving ultra high net worth individuals, doing a hodgepodge of all of these things right here. So it's safe to say I've seen a lot of the spectrum in the finance world, but honestly, I was just not that happy. I still miss trading in the trading world. Me sitting in an office, tied to a desk, looking out the window, and of course, dealing with typical corporate red tape was just not in my blood. I am not a stand by the water cooler, shoot the you know what type of person. I wanted to get back to the markets, to the charts, to the trading. And while I was still trading during this time, I truly missed being in the weeds of the markets, following charts, doing the analysis, and so on. So I left the corporate world and I started Seasonal Swing Trader. It's here where I publish research, ideas, and analysis to my followers, and it holds myself and our community accountable each and every day. But during this journey, there were certainly some painful lessons to be learned. I grew accounts, blew accounts, grew accounts, blew accounts. I learned that I was not a trading god. I was not above the market. Market didn't care about what my position was, and it damn sure didn't care about my opinion or what I thought it should do. So what does that mean? Well, it meant blown accounts, emotional trading, acting like a gunslinger, poor risk management, but I attribute these to all battle scars. And in this workshop, I'm going to attempt to help you think smart, think logical, with a proven price action strategy and plan so you can avoid the many mistakes that I, and I'm sure several of you are making or have made. But let's talk about you. Why are you here? You're here to have a reliable pattern for all market conditions, to have a strategy for all asset classes, and to be agnostic of market bias. In today's markets, it's imperative to make certain that we have a strategy that can trade both ways. We need to employ strategies that can profit during up markets, down markets, and sideways markets, and do also without guessing. So today, I'm going to show you a pattern that results in trend reversals, show you the point where a trend is likely to reverse, and I'm going to show you a pattern with the least risk and highest reward. So if everybody wants to see that and see that now, we're going to get right into it. And not only are you going to learn a strategy that's low risk, high reward, but it also works in all markets and time frames. I don't want to sit here and teach you a strategy that only works on a 1-minute Bitcoin chart or a weekly Facebook chart or a 4-hour crude chart. I want to show you a simple and straightforward strategy that works in any market, any condition, from ranging, consolidation, contraction, expansion, low vol, high vol. I don't care if you're a tick trader, a scalper, day trader, swing trader, position trader. You trade the underlying, you trade debit spreads, credit spreads, reverse crouching tiger, hidden dragon, condors. What I'm going to show you is powerful, and I'm going to prove it to you. Before we continue, it's important that we cover the process. Has anyone here heard of Jesse Livermore? If you haven't, I encourage you to read or pick up a copy of Reminiscences of a Stock Operator if you get the chance to do so. This is a classic must read on every trader's bookshelf. A question I often receive is, what do you think about the markets here? You know what my typical response is? I don't know, and I really don't care. And I know off the cuff, that sounds harsh, may sound ill-informed, especially when you're asked by friends or family members, as well as your in-laws, but it's true. For the most part, I really don't care about the daily news that flow in and out of the market. Of course, we want to be aware and cognizant of the major events, major news events going on around the world, but I am a trader that trades strategies based off probabilities. So we want to forget about market assumptions and only focus and trade with high probability strategies and what is in front of us. That means no more predicting. We must realize that knowing what is going on in the news and knowing how to make money consistently are two separate things. For successful traders, it's about your strategy, your logic, and your process. It doesn't matter what we think the market is going to do tomorrow. And I realize it's a very difficult concept for maybe newbie traders to understand, or even seasoned traders. I struggle with this. I certainly want to form my own opinion. It's just human nature. It took years for me to figure this out, because it doesn't pay for us to try to absorb every financial story out there or slap every indicator onto a chart. All I care about is when markets I'm following reach key criteria, but there is one more trait, because if we allow probabilities and not talking heads define our next move, we really need to possess and control one more trait, and that is patience, because we as traders know, or you should know, trades should never be forced, because a forced trade is not a statistically sound trade. We are in this for the long game, and patience is expected if you wish to bring in profits over the long term. And I know that sounds boring, maybe to the aggressive crowd out there, but I am more interested in the profitable trades, not trying to be a short-term hero who tries to trade every scenario out there. I am confident in trades that consist of key criteria that are setting up, and we're talking about extremely high probability trades. But patience is that key ingredient to the success of this strategy and really all strategies, and I can't emphasize that enough. So what is a high probability strategy? It's one that requires patience coupled with a disciplined approach, waiting for the appropriate scenario to unfold with a high probability of success is what makes this strategy a success. It also recognizes that opportunities are made up easier than losses. So if we let a few passes by, we don't dwell on what coulda, shoulda. There's always going to be more opportunities around the corner. And then lastly, I realize that the less I trade, the better my strategy will likely perform over the long term. And the long term is what matters, and this likelihood is what makes this high probability strategy unique and successful. But the takeaway, the grand takeaway, is patience pays. So what indicators do I use? Silas, what's the secret sauce? What are the ingredients? Well, I learned early on to keep it simple. Pick a few indicators and try to follow them. I can't tell you how many traders that I know want to follow Donchian channels, market profile, GAN, Bollinger Bands, Fib retracement, all on one chart. The list goes on and on. And there's nothing wrong with that. But this high probability strategy uses price action alone plus one very common and free indicator, along with a couple pro tips to take advantage of sentiment and technical extremes. So I don't know who here has seen Jerry Maguire. I'm not going to stand on my desk right now, rip my shirt off and yell, "Show me the money," like he does. Love it or hate it, it's a famous line. I can't show you the money because I don't know how you trade, but I will show you the opportunity. So let's get to it. It is divergence. Wow. New concept, right? Brand new concept. Of course it's not. And this is where people will start exiting and leaving and throwing stuff at the computer. What is this? Divergence. I already know that. It's subjective. Well, if that's you, I don't think anybody's like that in here. But if it is you, I would challenge you to stick around and show or see how we use divergence and what the special sauce is all about. So let's talk about divergence. It's basically when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. It warns us that the current price trade may be weakening and in some case may lead to a price changing direction. So basically, we're talking about an indicator price being in disagreement using any relevant indicator such as MACD, RSI, etc. And it's an indication of a reversal or a continuation, but more often a reversal. What is it? It can occur between the price of an asset and almost any technical or fundamental indicator or data. It's typically used by traders when the price is moving in the opposite direction of a technical indicator. So we have positive divergence. It occurs when the price is moving lower, but a technical indicator is moving higher or showing bullish signals. Negative divergence occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Why is it important? Because it's the earliest indication of a reversal. It's a good sign to exit, a good sign to scale. It means that we're usually buying near the bottom or selling near the top. Hint, hint, this means that the trades that we are taking, or the risk on our trades that we are taking are very small relative to our potential reward. Now we have regular classic divergence, sometimes called regular. We have bullish or bearish. Bullish is when price action makes a flat bottom or lower low and a higher low on the oscillator. Bearish divergence is when price action makes a flat top or higher high and a lower high on the oscillator. Traders use divergence to assess the underlying momentum on the price of an asset and for assessing the likelihood of a reversal. So the market's making new highs, but the RSI is making lower highs. It's warning us that price of the uptrend may be weakening. Positive divergence is the opposite. Imagine the price of your favorite stock making new lows while the RSI is making higher lows with each swing. Traders then conclude or may conclude that the lower lows and the price are losing their downward momentum and a trend reversal may soon follow. We also have hidden divergences, both bullish and bearish. Hidden bullish is when price action makes higher lows but lower lows on your oscillator. This is normally what we see in an uptrend. Hidden bearish or bullish is telling us that the oscillator is potentially recharging to go back up again, or is a continuation of an uptrend. Hidden bearish is when price action makes higher lows and higher highs on the oscillator, and this is what we normally see in a downtrend. Is telling us that the oscillator is creating space to likely go back down again, or is a continuation of a downtrend. So here is an example of regular bullish divergence. It's the most frequent and it is usually considered a sign of a reversal. Here we see that price is making lower lows, but the oscillator is making higher lows. Now we don't need a series of lower lows. We only need one low to be lower than the previous low, which is what we see right here. And this can usually be found near bottoms. Now, hidden bullish is a trend following type. If the price is making higher lows, but the oscillator is making lower lows, this can be seen when the price is in an uptrend and indicates that the price may tend to go higher. Regular bearish is the most frequent. It usually is considered a sign of a trend reversal. The price is making higher highs, and the oscillator is making lower highs, and this can typically be found near tops. And then hidden bearish is a trend following type. If the price is making lower highs, high, lower high, the oscillator is making higher highs, this can typically be seen when the price is in a downtrend and indicates that the price may continue its downward momentum. Now, I also want to talk about identifying strength. Consider the following scheme here. At point 1, buyers believe that the trend, a new trend has begun, and they want to make money. So what do? They open up long positions, they start buying the market, they push the market higher. The trend accelerates as more and more buyers are jumping into the market. At point 2, buyers are starting to take profits, the trend starts to weaken. Buyers still dominate, but they calm down a bit because they're afraid the trend is likely coming to an end. And then we get to point 3. There's no more buyers in the market. Sellers step in, sellers start placing orders, sellers start to take over the market and dominate the buyers, and the trend then reverses. We can use tools to help recognize trend and trend strength. And one of those can be found with the popular RSI indicator. I believe the standard rule of thumb, if you will, is when the RSI rises above 70, the market's considered to be overbought. When the RSI falls below 30, the market's considered to be oversold. This is a great concept, but we want to use the RSI indicator in a slightly different way. Look at the same chart again. Now we have two significant highs labeled A and B on the price chart, as well as in the corresponding RSI window pane below. In the price chart, we see that B is higher than A, means that the price is still going higher. RSI pane is just the opposite. B is lower than A, means that the trend has weakened and is likely going to reverse. And what happened? Lo and behold, market reversed and sold off in nice fashion. Now, we use the RSI in the previous example. It can be replaced with any momentum indicator, such as CCI, stochastics, MACD. All of these indicators are derived from price. There's no better or worse. It's only about preference. It doesn't matter which one you want to call your best friend. Every approach is good, but we want to go back and focus on what matters, and that is the concept of divergence. But before we get deeper into this, let's take a quick recap here for context. Bullish divergence when price makes two significant lows, but the second is lower. RSI makes two significant lows, but the second is higher. Bearish divergence, price makes two significant highs, but the second is higher. RSI makes two significant highs, but the second is lower. So Regular divergence. We previously defined that divergence is a discrepancy between price and indicator movement. Note now we've added the MACD to the chart. So when the price makes a new low, lower low, but the MACD makes a higher low, higher low, it's bullish divergence, signaling that the trend is likely to reverse. This is classic or regular divergence. Black line on the price is sloping up, but the black line on the MACD is sloping, the black line on the price is sloping down, the black line on the MACD is sloping up. Now, the depth of the divergence is a bit more of a subjective term. When you look at this example, we see two div patterns, a bullish and a bearish. The first divergence is nice, but the second one does not look as promising because the two peaks or troughs on the MACD are not as significant. So we consider a divergence pattern to be deep if the MACD crosses the zero line. Such a divergence provides a much stronger signal for a trend reversal. On this chart, we see two patterns. First example is almost a double bottom in this first example. The second example has more defined peaking action. When we peak, notice that the MACD line then comes down, crosses the zero line, rises back up, forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the zero line, this means that it is a higher quality divergence pattern. Now, we know the basics of divergence. Let's look at ways we can approach divergence in a smart and methodical manner. We've discovered that these patterns can lead to consolidation, correction, or possibly full trend reversals. And that's great, but we need a definitive plan about where to enter, where to exit, and where to place stop losses. Because with this strategy, we can make quick profits on small corrections or minor trend reversals, or we can try and capture major market moves. And when the trend reverses, it's every trader's goal to try and stay with the trend for as long as possible. And now that we know divergence is a very reliable pattern, let's talk about ways that it is viewed. Sometimes chart pattern traders see a double top pattern. Elliott wave traders see a shortened fifth wave instead, but they all refer to the same thing, divergence. This is what chart pattern traders see. This is what Elliott wave traders see. This is what we see. Most traders don't realize that MACD or RSI divergence is exactly what they're looking for. Our approach removes the subjectivity because the div pattern is well defined. So now let's talk about entry. Let's look at this into even greater detail with some charts. The first is entry. Where or how do we even enter these trades? So a couple different ways we can consider entries, and that is a simple enter on next candle open. We wait for the divergence candle to close, and then we enter on the next bar or candle open. Another method is to wait for a candlestick confirmation. That's to wait for a bearish candlestick or an engulfing pattern to sell the market, or just the opposite when we're looking to buy, a bullish candlestick pattern or a bullish engulfing to open up and establish long positions. So we've talked about entry. Now we need to talk about the least fun or exciting aspect of trading, but by far the most important, and that is stop losses or risk management. Now, it could be argued all day about the best place to put a stop loss, but again, we want to keep things simple and objective. For a stop loss with this strategy, we can place them just below the bullish div pattern for a buy, or just above the bearish div pattern for a sell, with a little bit of a buffer, and we'll talk about that later. In this example, we see that the second turning point right here, or the point of divergence, can act as minor resistance from which price uses to retrace, and we're thus protected from being stopped out too soon. So we've talked about entry, we've covered stop losses. Let's get to the fun part of trading, and that is profit taking. Where are we placing our targets? So our first goal is to make a profit before the market turns against us. We don't want to shoot for the moon, so we don't want to place the first profit target too far. I found that it's wise to place the profit target at significant areas of support or resistance, or what I like to call price structure. This keeps us from guessing an arbitrary amount of ticks or points. The divergence valley right here is a good place for profit taking. Notice here that we have very clear price structure at these levels, and price will more often than not gravitate towards these areas like a magnet. It's no coincidence that prices then have reactions at those levels. So by taking profits at these levels, we can profit from patterns that result in quick or minor trend changes or corrections. And we can make consistent profits based purely on this exit technique alone. But divergence, as we know, can also lead to complete trend reversals, and we want to make sure we take advantage of these trends that can occur, which we'll cover in just a bit. Candle, let's talk about candles. When we have a candlestick reversal pattern or opposite div pattern that appears, it can also serve as a good place to exit. These important reversal patterns can signal that the trend is going to reverse or at a bare minimum pause. So if we get a candlestick pattern that appears close to our first take profit level, but we don't get filled, we want to talk about or consider exiting at least partial position, whether that's a third, half, 2/3, because the price is likely going to reverse or at a bare minimum pause. Let's look at the next example. So here we can see price lurched up to the valley area, right near our take profit level. Put in a bearish reversal candle right near the TP level, retraced a bit, came back a second time, reversed again. This time it drifted all the way to the stop out area. So that's why it's a good idea to consider closing part of our positions up here rather than getting greedy, holding out for those last few ticks, pips, or points. Another great way to trade the strategy is to add the following moving averages to your chart. Here we've just got an 834 overlay. The 8 is the green or the fast EMA. The red is the 34 or red EMA. The first look at this example shows that the candlestick pattern right here was a solid place to exit. And I'm certainly not complaining. We sold here, first target's here, and we're trailing. If we get out here, I'm not complaining, but there is room for improvement. When we add that 834, we're stopped out from our shorts by a small candle correction, but then notice how we bump into the 34, reverse, and the trend continues. So when the price bounces from that slow EMA, we have a chance to re-enter the market and continue to ride the trade lower into profit. By stair-stepping above the swing highs all along the way until we get stopped out or we have an MA crossover. So now you've seen a handful of examples of catching quick moves as well as larger trend type moves. The most popular approach among traders for exits is to just exit at a certain number of ticks or points or pips, but most of them are doing it the wrong way. Because as you know, every market and every time frame have different volatility. So it makes no sense to go for an arbitrary 100 pips or 5 points or $7 and so on, because volatility changes over time and it changes over time for each instrument. So how do we determine our exits? Well, you can go back test and learn that individual market's movement or rhythm, but that is time consuming. There's an easier, less subjective way. So let's recap those exit strategies that work best for these setups. First one is structure, plain vanilla structure, valleys and dips at significant areas of support and resistance. Next, candlestick patterns, using bullish and bearish candlestick patterns, reversal patterns that when we get close to our first take profit level, but we weren't filled, we want to close half or partial position early. And then we can exit the balance of our position at some type of MA crossover or whatever trailing stop management you choose to use. Now we move to false divergences. How do we filter false divergences? Because they will certainly appear. We know that when traders are trying to jump into a new trend, they typically want some confirmation. And we know that a trend reversal can be confirmed with a divergence breakout. And to many traders, that divergence is confirmed when we have minor support or resistance that is broken. Now, there's nothing wrong with this, but with this approach, the entry can be too far away from the start of the move, and the risk can be too high when compared to the profit. Our goal is to limit risk. As we can see, where most traders are looking to enter, this is where we're looking to take a quick profit. We're looking to enter here, take profit here. We're looking to enter here, take profit here. We don't say that this entry technique is wrong, but there is a much more consistent way to achieve profits. And I also want to remind you that sometimes the MACD histogram can look choppy, quickly reversing up and down, implying that the market is in chop zone. And that can generate a series of false divergent signals. So for those of you out there just Googling chop indicator, best chop indicator, and so on, this is all you need. It's free with every platform. This right here, clearly telling us chop, trend, chop, trend, chop, trend. So you don't have to keep hunting. This can tell you if the market is in chop zone or not. Now, to prevent over trading, though, we found a way to recognize more clear patterns. Our gold rule says that the signal line must be crossed by the two peaks. Look at chart 1 on the left. You see how the signal line crossed the 0 line and came back to the second peak. But on chart 2 on the right, there's no crossing of the 0 line. So this, folks, is your higher quality div pattern. Now back to entries. Our goal is to enter as soon as possible after the pattern has formed. So our strategy gives a signal just after the MACD hook, or the turning point. That's what I call it. After the MACD hook has formed, you're going to recognize the second peak on the histogram. This is where we recommend entering on the next candle open. A very simple and very mechanical rule. But I've further fine-tuned this into what I think is an even more reliable method, and that's by using trend lines. Experience has shown that trend lines are a great confirmation tool, really, for any strategy. And when looking for a long signal, we simply draw a trend line on the chart by connecting the minor highs, placing a buy stop order just above the trend line. When looking for a short signal, we draw a trend line by connecting the minor lows, placing a sell stop order just below the trend line. When the price breaks the trend line, we are in. The entry is very similar to the quick entry on next candlestick open principle, but sometimes it protects us from false MACD hooks when the MACD turns again and continues to fall. So maybe a little bit more discretionary, but to me, I found it's the most effective way to enter on these div signals. And here's another example, but this time to the sell side. We place a small trend line on the chart. We can enter on a sell stop or a confirmation retest of the trend line break. So let's recap what you've learned. You've learned a high probability reversal strategy. You've learned where to enter, where to place risk, where to take profits, and how to filter false setups. But how do professionals trade it? You ever wonder why the market turns against you when you jump onto a new trend? Because that most tempting signal is usually a trap. As there are no more buyers to move the market, the sellers dominate. As there are no more sellers to move the market, the buyers dominate. Divergence masters know how to enter in the opposite direction just before a trend turns. And this is a quote I love, Max Gunther of Zurich Axioms. Yes, following the herd may work sometimes. Think of the 90s tech bubble, worked until it didn't. 2000s real estate boom, worked until it didn't. Crypto mania of the 2010s. But do you really want to be the one chasing new highs when you have a high probability strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? If you answer no, then you're probably in the wrong place. But of course you do. Of course, that is our goal and our main reason for trading. Now, when we trade this way, our winning batting average could be sub 50%. Yes, we don't have to be right 50% of the time, even 40% of the time, when your risk to reward is overwhelmingly skewed in your favor. But here are some additional pearls of wisdom. The less I trade, probably the less you trade, the more money you're likely going to make. We want to filter the unreliable divergence patterns and focus only on the strongest signals. We want to use a customizable indicator that can deal with this for us, where the process of recognizing the pattern in the chart is done for us automatically. And we sit back, enjoy the various exit levels, and find out what suits our trading style the best. But how do we do all this? Well, you can scout on the lower time frames or swing or position trade off the longer term time frames. And you can trade any asset class or instrument that you wish. It all depends on your style of trading. But you've got to be patient. You've got to avoid over trading, because in this game that we call trading, patience pays. But how do we do it? Silos, too many markets, too many time frames. I don't have enough time. And I hear you. I understand it, because I'm in the same boat. But we've now developed a time-saving solution so that traders can live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, scrutinizing hundreds of charts, trying to determine if what they are eyeballing is actually divergence or not. We've now cracked the code and simplified the process. But how? Who here is ready to stand out from the crowd? Who's ready to treat trading like the business that it is and ready to trade like a professional? I'm gonna take a swig of water here. And all the folks that have asked questions throughout the presentation, thank you. I'm gonna get to those at the end. I wanna make sure to teach you the strategy. All right, lots of people say, yes, absolutely, now's the time. Screw 2020, ready for 2021. Of course you are. Well, I'm proud to introduce the Divergence Dominator Pro. It's time to automate this. DD Pro is a fully complete, comprehensive trading business in a box solution. So let me quickly guide you through what this package is so you can immediately see how it will benefit your trading starting as early as today. What is it? What all do you get? It's a great question. First, you're going to get the turning point identifier indicator, what I call a T.P.I, DD Pro scanner, Price Action Pro trading course, Candlestick Recognizer Guide, Divergence Cheat Sheet, DD Pro Trade Journal, and a T.P.I Fast Slow Line Cheat Sheet. But what the heck is all this? Well, let's talk about it. The turning point identifier indicator, or the T.P.I, is an indicator that auto-plots divergence setups for you across multiple markets and multiple time frames. Let's see what this looks like in action. This is the T.P.I in action. Can everybody see this? You pull up your favorite chart, attach the T.P.I indicator, and bam, what would take a long time using your eyeballs and maybe some extra Visine, you can now literally see in seconds. This is a daily chart of IBM. You see the bullish divergence pattern in our T.P.I buy signal. Bearish divergence line, T.P.I bearish signal. Here is a daily chart of the US yen, T.P.I buy signal, T.P.I sell signal, T.P.I buy signal, T.P.I sell signal. You can now in a glance see major reversal turning points on any market or any time frame of our choosing. This is a 5-minute chart of the pound, T.P.I buy signal, T.P.I sell signal. What platforms? Well, how about Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MetaTrader 4. Here's what it looks like on Thinkorswim. You can see our T.P.I sell signals down here on the bottom pane, T.P.I buy signals, T.P.I buy signals. Here's what it looks like on TradeStation, T.P.I buy, T.P.I sell, T.P.I sell. Here's what it looks like on NT8, T.P.I buys, T.P.I buys, T.P.I sells, T.P.I buys, T.P.I sells. Here's what it looks like on TradingView, T.P.I sell, T.P.I sell, or excuse me, T.P.I buy, T.P.I sell, and then MetaTrader 4. T.P.I sell, TPI sell, TPI buy, TPI buy. DD Pro scanner. DD Pro scanner, we've had a scanner built for TradeStation, NinjaTrader 8, and Think or Swim, where we now can have the scanner and technology do the works. We don't want to locate all of these manually. If you've been trading for some time, you know that manually identifying these setups are difficult and time consuming, especially when you're analyzing multiple markets and time frames. And that is where the TPI comes into play, automatically detecting the highest probability patterns for us with the click of a button. Here's what it looks like on TradeStation. Here's what it looks like in NT8. I don't have a picture of TOS because we just added it. But combined with the TPI indicator and the scanner, capable now of identifying divergences across all asset classes, time frames, chart types, whether you're a scalper, day trader, swing, or position trader. But aside from the indicator and scanner, I really feel like the crown jewel of this package is my Price Action Pro trading course. This is a never before released course where you're going to get immediate access to a 10-part on-demand video module. This is my only full step A to Z training course focused on trading pure price action, how to find and identify the most important areas to even consider being a buyer or seller, removing the uncertainty, all by trading in conjunction with the TPI. So, do you want to quit guessing, feel confident about your entries, remove your emotions, begin to think like a professional, scale your reward versus risk, have a trading plan? If the answer is yes, then the Price Action Pro course has this. It has all of the solutions to help you with each and every one of these bullets. Pat can help solve these troubles in a comprehensive step-by-step on-demand video module course that can be viewed over and over again. So yes, you're going to get the TPI indicator for 5 platforms, the scanner for 3 platforms, but I feel like this will ultimately help jumpstart your success even further. You're also going to get the candlestick pattern recognizer guide. We all know that there are dozens of candlestick formations out there, but this guide is short and sweet, only covers the most important candle patterns that we should be focusing on. You're also going to get the Divergence cheat sheet, another incredible bonus that you can also download and print. This is great for those that like written descriptions and summaries, but can also accompany all of the video modules. So the Divergence Dominator Pro, you're going to get the TPI indicator for all 5 platforms, the DD Pro scanner for 3 platforms, the candlestick guide, Divergence cheat sheet, the TPI fast slow line cheat sheet, and the DD Pro trade journal. But what is all this worth? What is all this worth to you? If you're now able to profit in any market condition, you can anticipate major market reversals and turning points. If you can now trade on your time, what meets your trading style, whether you're a scalper, swing trader, or position trader, and you now had all the tools. You had a scanner, indicator, videos, training guides, and my access to me, VIP email support. DD Pro does all the hard work for you. You no longer have to guess on where to enter and where to exit. But we need to determine if this is a fit for you. If you like scalping all day long on nanosecond charts, if you like to be stressed out and have heart palpitations, if you like get a thrill out of blowing out accounts, you have a gambling mindset and never have a clue where the market is likely headed, I'm sorry, this is probably not for you. You can exit, we can shake hands, and I wish you the best of luck in trading. But if you're ready to think like a professional trader, you're ready to remove your gambling mindset, you're ready to get serious and treat trading like a business, and you're ready to kick your emotions and have confidence, then this package could be for you. And if that is for you, I have a very special offer for today's attendees. We know that the Divergence Dominator Pro package is very powerful. The TPI indicators alone cost over $2,000. The scanner package over $1,500. The PAP course over $500. All of the guides and cheat sheets bring the total value to $4,427. but I'm very proud of this indicator, Price Action Pro course, all of the educational material. I want to get this out to a small handful of people that are serious and that are tired of kicking the tires. They're sick of jumping from system to system. Those that are ready to remove the emotions, and most importantly, those that are ready to take action and see some real results. So we're not going to charge $4,000, $427. We're not even charge $3,000, $2,000, or even $997. As part of this live webinar special, we're pleased to offer this to the first 25 signups, a single one-time fee of $397. And we limit this actually to the first 10 signups. The offer link is seasonalswingtrader.com/pro. Now put that into the chat for you. Say one-time fee, you own it for life for all platforms. This is 90% off the $4,400 value. You're going to get the indicator suite, the scanner set, the PAP course, all of the guides and cheat sheets for a one low time fee of $397. Now, I often get asked, Silas, how do you trade these setups? And I don't mind the question. I enjoy getting feedback from all of our students and members, and even those that are on the fence. But the easy answer is that it just depends. It depends on the setup, my outlook, how many positions I have on at the time, the risk reward of that particular setup. But how do I trade these? I like to trade credit spreads for swing trading, and I'll trade the underlying on both futures and Forex. I will trade debits occasionally, but I do favor credit spreads on equities and commodities. But let me say that how I trade really doesn't matter. Frankly, you should not be concerned with what I or your neighbor or your trading colleague is doing. You have a question or idea, shoot it to me. I'll answer you all day long. But at the end of the day, you are in control of your own account, how much capital you have, your knowledge, your risk tolerance, and the time you can personally commit. We're all different creatures. We all trade differently. So here's the offer link again for the first 10 people that are serious and taking their trading to the next level. And I'm going to show you the members area. We're going to look at some charts, but let me first get to the questions here. We've got a lot of them. Okay. How long of a time period are you looking in for divergence pattern? All depends on the time frame that we're looking at. I don't know if that answers your question. How long of a time period are you looking in? Just depends on if I'm on an intraday chart trading intraday, or if I'm on a swing, if I'm trying to swing trade looking at daily, weekly, or monthly. What is the signal on the charts? What is the signal on the charts you showed? I'm not sure what chart you're referring to, but the signal is likely going to be the T.P.I indicator, the buy or sell arrow. And show it on toss again. Let me see if I can back up. Let me see if I can. Actually, let me. Sorry, guys. Let me go back. You want to look at toss. All right, can you see, Mary, can you see toss? This is think or swim. So no, these boxes, these are for illustration purposes, trying to show you, because I don't know if these arrows down here may be hard to see on the presentation deck. But these are your divergence T.P.I signals. The box is for illustrative purposes. So the T.P.I fast slow line is the T.P.I indicator is locating the divergent signals for you again, so you're not having to guess or scan yourself. T.P.I fast slow line is a proprietary indicator that incorporates lots of factors, We'll talk about what the fast slow line is. There's actually a cheat sheet inside the members area. Let's see here. Get back to the charting platform. All right, so this is inside the members area here. Here's your indicator. Yes, you get access to all platforms. Here's the scanner. So we've had this where you can scan for, in Thinkorswim, you can scan for the buy-sell signals, T.P.I buy-sell signals, which are the arrows, or you can scan for the T.P.I fast slow line cross. Your installation guides here. Here's your price action pro course trade model modules. Well, like I say, whether you use divergence or not in your trading, or use the indicator or not in your trading, I think this right here alone is going to show you what you need in order to trade price action effectively. But when you combine that or marry that up with the TPI indicator, it is like icing on the cake, and you have a very, very good scenario. Putting it all together, and then here are all of your guides and cheat sheets. So the TPI fast slow line guide, we have that in the members area. Now, if we look at, let's look here. All right, so I would say when you're starting out with this package, you know, understand the signals, understand trading with price action. But the fast slow line signals, I'll use more as a risk management tool, not for entries. You'll notice that sometimes we get nice crosses, which could theoretically be a buy or sell, but again, I don't treat it that way. When we get flat right here, it's more of a non-trending environment. When we loop down and back up, or we're up and then loop back down, that's when we can catch some decent moves. Sometimes it will catch it quicker than the divergence arrow. Sometimes it will lag. So again, just read the guide, understand it, how you can use it in conjunction. But I would focus on the TPI buy sell signals first. You're welcome, Barry. The reason we limit is because of support. So I manage our support desk, my support box. I read and see everything that comes in. I'll reply to you, communicate with you. As far as tech issues, how do I get into the members area? I lost my password. I didn't get my welcome email, those kinds of things. My tech guy handles all that. And we take our support very seriously. We want to take care of our members and our students, and we just don't leave you hanging. And we're with you to the end. We'll help you from a tech perspective. He can log in, install things for you, install indicators, scanners if needed. If you have any problems or issues whatsoever, you can always reach out. The support never expires. So let me see. Yeah, we're going to take a look at some charts. Which one is better, chart pattern or candle pattern? Not sure what you mean by that. Which pattern is better, chart pattern or a candle pattern? So I'm using price action, pure price action for my levels and for my targets. Candlestick patterns will help me take a look while I'm in a trade to possibly exit or tighten risk, saying, hey, this looks like we could be reversing, because candlestick patterns are very powerful. And I'll also use them for entries. Let me scroll back up here. No, they do not repaint. First time is great. Glad you enjoyed the strategy. T.P.I is indicator is has a it's divergence. If you wanted to, you know, if you're asking me what I would compare it most likely to, probably the MACD. Not probably, I would compare it to the MACD. Can't show a TradeStation chart, Carl, because I'm not logged into TradeStation right now. I'm not logged into any platforms. I try not to do this on this particular computer because it jacks up the slowness and the GoToWebinar. I've had it where it's like froze and shut things down before. On my PC, I will run TOS occasionally to demonstrate. Yeah, I'll show you 5-minute charts today here in just a second. If you want to pay via PayPal, you could email us at support@seasonalswingtrader.com, support@seasonalswingtrader.com. Just let us know that you want to pay via PayPal, and our team will have to create a custom link. This is a one-time fee. Yeah, I can show you the offer again. This is a one-time fee. You're going to get all this here. All this here. And yes, you will own it. Yes, you get access to all platforms. Can you trade commodities in minis? Yes, absolutely. Trade commodity futures as well as the mini futures contracts, as well as the E-minis. NASDAQ, Dow, S&P, Russell. Can it place the divergence lines on the chart above and below the candles? See if I understand that. Can it place the divergence lines on the chart? On TradingView, the lines are not, it does not plot the lines onto the chart. No, unfortunately. Same thing with Thinkorswim. It's just a technology thing that you can't put the lines on. You do get those on Ninja, MT4, and I believe TradeStation. Let me just go back and look. Yeah, TradeStation. The TradeStation, Ninja, and MT4 will actually plot the divergence lines on the bullish bearish lines. Now there are the bullish bearish and bullish divergence lines are down here in the pane below. They may be hard to see. You can change all of the settings here, though. You can change arrow size, colors, all of that. Here's the colors, the width, and to make things stand out, you know, better, brighter for you if you wish to do that. All right, thanks, Ped. You should get your welcome email, and it literally takes probably 1 minute, if that. If it takes longer than that, maybe check your spam or junk folder, but you should get it immediately. So let's take a look. I know some of you want to take a look at like lower time frames, 5-minute S&P indices today. All right, so S&P today, we only had one trade, and one trade on the 5-minute, and it caught this sell signal right here at around 110. In Q, probably going to be the same area. So we caught let's see, to catch this guy back here. Nope. So we got a sell here today in the afternoon session, and then we caught a buy here right here in the last hour of the day. And we had a nice little trend line break. It's the way I prefer to trade these trend line breaks. And then we look to get in. Let's look at some of the other markets you guys want to look at. Some of the currencies works well on a 5-10 minute chart on currencies. So the Aussie dollar, we had, looks like we had a short here, right here, and then another short right here. The pound had a buy right here. Looks like we had a buy here later in the day. Canadian dollar, looks like we had a sell. Let's go to the euro. Nothing today in the euro. Let's look at the yen. We had a sell right here in the yen, and it looks like a sell again here to the year, kind of flat. Maybe it stopped out. Let's look at crude oil. Crude oil is a great market. Had trade a short here at around 11. Short trade around 11. Okay, so profit levels and exit levels. Remember, we're looking for the valleys or areas of structure. So first targets are going to be right here. Secondary targets will be down here. And then third targets would be down here. So on the intraday charts, you've got to realize that you may not reach your full profit objectives. More often than not, they're going to move in the right favor for you, but they may not reach your areas of structure. Depends on how far that structure away is. It depends on the volatility of the market. So somebody asked, how often do you get signals, or how often do they appear? Well, I can't answer that. It depends on the market. Depends on the market and the market movement and the volatility, right? So today we got lucky and we're happened to reach level one and profit level 2. Remember, our risk is just above the swing high plus a buffer. And so one of the things that I'm talking with my programmer on, and everybody that gets in will have access to this, any future enhancements here now or later, is we're working to add an additional, an optional price levels. So what does that mean? Exit levels and target levels. So our exit levels, you know that we know that based on what we just talked about for the last hour, was placing our stops just above risk. I mean, is placed just above the highs, or if this was a long, we place it right here below the swing low. But now we want to add a feature that we can add just for visual purposes, a stop level based on the ATR, because ATR is going to vary depending on each market as well as each time frame. So we flip from a 5-minute to a daily. The ATR is going to differ for that time frame. So what we're working on building is a stop level component based on the ATR, and you have the ability to put in a multiplier. So you could say 1.5 ATR or 2.5 times ATR, 5 times ATR, and whatever you put that at, it will plot your level up here before you, so you can easily see where your stop is. As far as profit levels, that's a little bit trickier. We're excited about it, but it's a little bit trickier because it's more discretionary, right? Where do you place your target levels? We're looking at the prior two swings. So in this short example, it would be first swing low, you get a level here. Second swing low, you'd get a level here. So right as it is now, the beta version, you've got a stop, you have a target 1 and a target 2. That's what we're looking at. Yeah, that's good stuff. Ron, if you have any questions about that, you could email me, support@cecilswingtrader.com. Ray, yeah, absolutely. If you've got questions about what platforms to use, email me. I've got experience with them all. I've got accounts with them all. You know, it really just comes down to preference. Had somebody ask me, sent me an email this morning about that, you know, wondering what to use, which one's better. There's really none that are better. I mean, they all have their pros and cons. I love TradingView because it's very clean, it's fast, it's mobile friendly, and I'm always looking at these on my phone, probably when I shouldn't be, sit there laying in bed or on the couch looking at charts and quotes and such, and you'll be able to see the indicator there. I use the only thing though, like there's there's pros and cons. I would love to be able to execute from TradingView, love to be able to trade options. So I do the execution on most of my execution on Thinkorswim, all my options traded there. I've got futures accounts with different IBs for commodities and commodity options, and then I've got I also we'll use MT4 as well, and then I've got accounts with TradeStation and Ninja. I just don't really use them that much. Just really depends on the way I look at it is, visual aesthetics. What is better for your eyeball? What markets are you trading and looking? What is execution from that platform? Is it important? So yeah, that's the thing with that's just part of it. You can't please everybody, so that's why there's all these different options out there. Interactive brokers, what I think about them, I used to do a lot of block trading, a lot of big size block trading on interactive brokers. I absolutely hated the platform. I still dislike it for charting, but all in all, the execution was pretty good once I got the hang of it. Trading spreads, and it was cost efficient as well. Let's see. All right, you got your welcome email. Good. Yeah, let me put my email address in there for those that would like to email me with other questions, and I'll do my best to get to you here this afternoon. As far as tech related issues, it might be getting late for my guy to help there, but he'll get on top of it first thing tomorrow morning, but I can help answer most of the general stuff. And I like how you call me Silos, S-I-L-O-S. I haven't even corrected you. I'll just run with that. When the trades appear, can it signal on as an audible alert? Carl, that's a great question. Just depends on the platform. I honestly don't know, and I should know. Like on Ninja and TradeStation, I'm not into those platforms enough. But with TOS, you can. You're going to get it like an alert. Like I've got another indicator that I have loaded, and when I get that signal that appears, I get a really annoying loud alarm bell that sounds. So what we're trying to do, and I'm not making any promises because I don't know if it can be done, but in a perfect world, what I would like to see happen is, and I don't really care what platform it comes from, just as long as the data and it's the data is accurate and it's putting out accurate signals based on the T.P.I indicator, is some type of just shooting me alerts like as they appear. Like yes, we've got scanners and things like that, and that's great, but if you're not looking at the scanner, you kind of miss out. So I'm trying to figure out how I could get signals sent to me via like SMS text and or email as they trigger, and that would need to be done across various time frames. Like I want them on daily for equities and commodities and FX. I want them on 4 hour for some markets. I want them on 1 hour and 10 minutes for some markets. So that's kind of the next big thing that I'm trying to work on in the pipeline. Yep, let's look at some daily charts real quick. Yeah, I'm sorry. Gold. Let's look at gold and ZB. So we didn't have, okay, let's So we had a nice sell trade here early in the morning on gold, traded to the downside the rest of the day, then a buy here late in the day. ZB 30-year bonds. Right, we had a sell here. What else did we have? Early pre-market, we had a buy. We had a sell to the downside, sell to the downside. So very nice trades there. Really just kind of one and dones on most of those. Yeah, AXP daily. All right, so American Express. This is our last trade we had, our last signal we had back in Jan. Dollar Tree. Last trade we had was in December. Let's scroll this up back. Another sell in August. Ralph Lauren. Looks like we had a buy in August, sell in early December, and then another sell in mid-Jan. CBOE. We had a buy in August and a sell in Jan. Yeah, I did. I did look at those last night. Let me pull those back up. The FANG stocks, the 1 hour FANGs, I was really quite blown away. Let's look at the 1 hour here, these little 1 hour swing trades. Netflix. Let's go to Facebook. Looks like we probably had a loser here. Nice buy here. Nice sell here. Apple. We had a buy here, sideways and up. A sell here. Nice trade. Goog. We had a sell, a buy, and then we had a sell right there heading into earnings. Yeah, there is a scanner available. There is a scanner available on these platforms. TradeStation, NinjaTrader 8, and Thinkorswim. Yeah, S&P, or we'll call it SPY. So the SPY and the indices on a daily chart are pretty much giving false sell signals because we're making continuous new highs, or we had been. If you drill down to the lower time frames, you're going to catch some. You'll see some amazing sells here on the hour. We'll go to the 4 hour. Let's go to the S&P as we got more trading action. So here on the S&P, going back to late December, we had a sell, and then we had a buy right here, which I did in a free video last week. Now, if you look at the daily, it's not as pretty because we've been in these huge uptrends, right? I mean, if you look at these trends, I've already got that one drawn. We didn't get any print here because this high, we would have had a higher high. If we had, and we had divergence, that would have been a nice little sell signal. But you can see that we're trying to get, been trying to get sells all along this uptrend. But if you drill down to the 4 hour, that's where the power of the multiple time frame analysis comes into play. And we cover that in the Price Action Pro course. It's going to show you how to methodically start with the higher time frames. You don't have to do that. You don't have to follow those rules. But if you want to put the odds in your favor and on your side, I would highly encourage you to do so. You don't have to go all the way up to monthly. You get bonus points if you do, but you've got to figure out where you fit in, what kind of time frame you want to focus on. So if you're swing trading, I would definitely look at weekly, daily, if not monthly, weekly, daily for swing. Use your daily charts to enter off of weekly bias. If you're looking at the shorter time frames, maybe daily 4 hour, and then 4 hour, 1 hour, 1 hour, 10 minutes, and so on. I don't know if we're sold out today. We moved this to 10 so my guys could get to you. A performance record? No, there's no performance record because there's hundreds, if not thousands, of potential opportunities. Different thousands of equity markets, 30-something futures and Forex pairs, and what dozens of different time frames. But you can go back and see how each of them did on your particular time frame. So you plug in the S&P at end of day, scan and look for the following day for option entries. S&P 500. Yeah, Biz. So you could, if you want to scan across the S&P, scan across the NASDAQ, scan across whatever watch list may be pre-built inside your trading platform or your own custom, you could run those at the end of the day, and it will populate those that have come up with a T.P.I buy signal or T.P.I sell signal. And you can also specify the bar look back. What does that mean? It means that let's say that you ran your scan, and you have the ability to specify how many bars you want it to look back. So you could say, I want to scan for the T.P.I buy sell signals and I want a 10-bar look back. So it'd count 10 bars and it would capture all the signals within 10 bars. If you want to go back 15 bars, 5 bars, only 1 bar, that's how that works, if that makes sense. Unfortunately, this is just one of TOS's limitations, and one of the reasons that it took so long to get TOS rolled out, and I was not very happy because I use TOS as my primary platform. You need to limit your scans to 100 symbols on TOS. As far as I know, with TraceStation and Trader 8, we don't have those limitations. But on Thinkorswim, you have to limit it to 100. But that means, so like on the S&P 500, you need to break up the scan into 5 watch lists. And there's just nothing I can do. We've worked on this for probably 4 months, and we kept getting errors and timeouts, and really throw the platform in for a loop. And hopefully that will change one day, but right now we need to cap the scan to 100 on Thinkorswim. Identifying trading zones. So yeah, that's in here, right here, identifying trading zones. And it's just about, as I said, starting with the higher time frame, working your way down, identifying key areas of structure and trading in line with that area of structure with the T.P.I. Very, very powerful. You're very welcome. Look forward to working with you as well. All right, guys, I think we're probably an hour and a half into this thing, 30 minutes past. If I missed anybody's questions, didn't mean to do on purpose. Email me at support@seasonalswingtrader. I'll take a look here in just a few minutes. Try to get to everybody so you at least have an acknowledgement or an answer. heading into this evening and into tomorrow. Tech related stuff. My guy, if he's still around, I'll have him get right on it. Otherwise, it'll be first thing in the morning. Nobody's ignoring you. Trust me. We monitor these things like a hawk. But I appreciate your time, your interest. I look forward to working with everybody. Hope you can saw and appreciate what was presented today. If not, that's cool too. Good luck with you and your strategy. So I'm happy to have presented this. Enjoy it. This is what I live, eat, breathe. So thanks again. Take care. Be safe out there in trading and in your health. And we'll see you on the flip side. Thanks, guys.